Hey everyone, me Kevin here. It's official. Elon Musk has begun selling shares of Tesla stock. Let's get right into what's going on. Quick mention though, this video is brought to you by Masterworks. Link in the description and more on them in just a moment. So folks, Elon Musk was assigned way back in 2012, or awarded, I should say, 22.8 million shares of Tesla at a strike price of $6.24. And the way stock-based compensation works is that if you get awarded stock options that vest at a certain point in the future, you either exercise them to take the shares or you lose them. You obviously don't want to lose them, so you're going to exercise them. But the problem with that is, if the stock, for example, is selling for $1,200, and your options have a strike, they're kind of like call options, they have a strike of $6.24, when you receive the shares for $6.24, you are going to have to pay taxes on the difference here. That's because this is a form of compensation. Now, Elon Musk, I'm not sure if he's going to have to pay these taxes as a quarterly this year, or if he'll have to pay them on April 15th, or if he's going to go on extension next year to pay them. So he might be able to play with the money, or just get rid of the tax bill, just pay the tax bill now and get it over with. That's also a possibility. Who knows? Maybe in the meantime he'll throw his money into Bitcoin. That'll all just be speculation, though. But Elon Musk has to pay taxes on this difference. So that would be, in this case, about $1,193.76 that he would have to pay taxes on. And so taxes on this would probably be somewhere in the neighborhood of 45%, possibly closer to 50%, just depending on his tax situation and exactly where his domicile is. I believe he's in Texas now, but I don't know if he's been there the full year, so that's obviously going to depend since he just moved from California. But anyway, the point is he's going to have to pay a lot of taxes on $1,193 in gains in this example. I think he sold for slightly less than this, so probably a little less than this. But the point is he's going to have to pay taxes on this. So Elon Musk knows that he can borrow money. He could take out a margin loan, basically a loan against his stake in Tesla, or he could sell shares to cover his tax liability. We expect that his tax liability would be somewhere between $13 to $14 billion. And if Tesla sells somewhere around 10% of his Tesla holdings, he would get somewhere around $28 billion, but he would probably also have to pay taxes on a substantial portion of that $28 billion. So he'd probably have to pay another, let's say, $14 billion. And this shows you how literally his full $28 billion could potentially be going to taxes. So the portion that he sold, the $28 billion that he potentially sold, that's about 10% to cover the taxes he has on his options, but then also the taxes on the shares that he sold. So potentially all that money is going to taxes. Now, he's still going to be way up. I mean, consider this, 22.8 million shares of Tesla. Hey Siri, 22.8 million times 1,100. That second here. 25 billion.
Is 25 billion, 80 million.
Yeah. So basically, really what he's doing here is it's like he liquidated approximately $28 billion, paid that all in taxes to cover taxes on his options that he got, and then he got the shares right back via options. It's brilliant. But what's even more brilliant is he branded it as if he let Twitter decide that for him. Obviously, if you're going to put on Twitter, hey, should I pay more in taxes? You're probably going to end up paying more taxes, right? But anyway, Elon Musk just filed his first Form S-4. We expect that there's going to be another one tomorrow because remember, you have 2 days to file the form. I'm going to show you the form to show you when he sold, but quickly, I just want to mention that we do have a sponsor for today's video, and that is Masterworks. So I'm excited about sharing this with you for Masterworks. So a lot of you know that we're always tracking trends, trying to understand what's going on with hedging against inflation, market crashes, and the market's pretty volatile, and some equity firms are projecting real returns of 5% or less for the broader stock market, and Morningstar is potentially even predicting negative growth, and that's not good. And that's not to say they're right, but it's something to take into consideration if you're looking to diversify your portfolio away from stocks. And there's an asset class that a lot of folks don't talk a lot about, that by some measures has outpaced the S&P 500 by around 174% from 1995 to 2020. And what's incredible, considering this, we've had a historic bull run, is that this particular investment has outpaced the S&P 500 over that period. Now, this is almost double the appreciation rate of real estate, gold, and 90% of cryptos during that same time, unleveraged, of course. And this asset is contemporary art. Now, I know that's not for everybody, but a lot of folks are very, very excited about this as a way to diversify. And this is why I think it's sometimes undermentioned in really social media and the investment space. And this is potentially because it's not as traditional. And the cool thing is about Masterworks, you can get a slice of incredible artwork without having to have multi-millions of dollars lying around to buy art to diversify your portfolio yourself. See, Masterworks allows retail investors to own a slice of a piece of art. Masterworks.io has emerged as the only platform taking billionaire art collectors head on and letting us access their exclusive investments. Simply put, you can now invest into the same art they do, names like Banksy and Monet and other iconic art, for just a fraction of what they pay to purchase because you're getting a slice. Now, all you have to do to add these assets to your portfolio to diversify is simply go to Masterworks.io, create an account, and browse their latest artwork. Invest in any of their current offerings, and just the same way that you would open up Robinhood, buy and potentially sell your shares of art. So remember, you can either hold your shares or you could sell them on the secondary market, but so far investors have already received a 32% annualized return from 2020 when there was a sale of a Banksy Mona Lisa. Pretty impressive. But anyway, check out the link in the description down below. And for now, let's go on back over to these SEC forms. So take a look at this. This is one of the first of 2 SEC forms filed by Elon Musk. This shows that we've got about 930,000 shares that were sold, and they were sold anywhere from $1,196 down to $1,176 on this particular sheet. And on this sheet, we see a lot of shares sold between $1,175 and $1,135. So these shares were sold between $1,135 and $1,196 at the higher price on Monday. We have options here of 2.1 million shares that were acquired. And this is just a fraction of the total options that Elon Musk has. Remember, Elon Musk has the right to acquire 22.8 million shares. And this is only a sale of 934,000 shares. So given that when we look at what kind of happened in the stock, in Tesla stock, it looks like a lot of these sales were done on Tuesday, which is kind of what we expected, which Elon Musk has until the end of the day tomorrow to file this SEC Form 4 to disclose that he did sell the rest on Tuesday, if he indeed did. But take a look at this. If we go to the 5-day chart here, the first big drop that we get is on Monday when the stock drops about 5.95%. First batch of Elon Musk selling. You could see the prices around 1161, 1140, going down to 1148. Intra-minute, or intra-hour went down to 1135 and lower. And then Tuesday, we had significantly more volume, and that's when we fell about 12% on the day. Now, today, Tesla stock is actually up 4.34%, potentially implying that the selling is done. So what we have is an indicator that the first batch of selling was done here. The second batch of selling, we're sure of this. We have a disclosure of this. Only about 5% of the shares were actually sold on this date. But on Tuesday, we expect the rest of the shares were sold because look at the volume, folks. The average volume for Tesla before this crazy run was somewhere around 13 to 20 million shares per day. Well, if you go to Monday, you get 33 million shares of volume, which is a substantial uptick from just Friday before that at 21 million or the day before that at 25 million. So substantial uptick at 33 million. You'd expect a lot of media enthusiasm went into potentially selling Tesla stock ahead of Elon as well, though. And then the very next day, we had 59 million shares of volume, which is almost double the normal volume. So it kind of makes sense that if Elon was going to be selling around 10% of his stake, or maybe around 28 million shares, which is roughly what he was getting in stock options, that Tuesday was probably the day. Remember, he's getting 22.8 million shares in stock options. 22.8 million shares, $28 billion worth, okay? So 22.8 million shares it makes sense because if we remove all of that extra volume from Tuesday's volume of 59, we'd get to about 31 million of share volume, which would kind of be right in line of what we've seen in prior days. And certainly still elevated from prior weeks because we've been on this sort of euphoric run. So bottom line, Elon Musk has started his selling, sold about 5% of what he committed to on Monday. We expect that the rest was done on Tuesday. We will get the final Form 4 probably tomorrow afternoon. This is very good news, though. Keep in mind that the stock market is closed tomorrow, though. So that means no course member live stream, unfortunately, for all of those of you in the Stocks and Psychology and Money group or any of the other courses linked down below with that coupon code linked below, StockDoc. Check that out. Learn my psychology of money and how I do fundamental analysis and all the good stuff. So check that out, link down below. We'll see you again on Friday. Folks, thank you so much for being here. Enjoy Veterans Day tomorrow, and we'll see you next time. Bye.